And welcome back to our Capitali. Thank you very much for joining us. Second video to go up. Don't worry, I'm not going to keep on counting them, but I do count this as the first actual video. I was just introducing myself, and what our Capitali does. So this is the first official video, and what else can we talk about apart from gold? Gold has been the monetary value for thousands and thousands of years. People have used gold throughout the millennia. That is what we buy and sell. That was always still value in, and it still works to this day. Same it did for the Sumerians, Egyptians, everyone. They all use gold. Gold is a very good conductor of electricity. It doesn't wither away. Gold stays in its natural form for maybe millennium years. A long time. So today our main focus is just looking at the price of gold, just looking at the charts and what might be going on in the news in terms of the FOMC Fed minutes. So let's get right ahead and then get started. So here's the spot gold price here, daily chart. See here this bullish run right there. I was actually in these trades. Let me just show you a couple of trades before we get on this one. It was in the previous video I actually showed you, but then yeah, this is one of the gold trades. So I do know how to trade gold. This was before this one here, and that was after. One of my best trades ever. Right, anyway, so that was the run that I was trading. Yeah. So right now with gold, what are people saying? Because what I'm seeing is a confliction of information coming out. People are saying, oh no, it's too high, you better sell it, let it come down a bit, blah blah blah. You know how people do it. So yeah. Then what I'm saying is, I should literally no point selling this now. Alright? Because, well, there is a point in selling it, but unless you're trading gold on a shorter time frame, intraday, maybe like some swing trades, anything like that, then yeah, I probably can short it. But then gold is very heavily undervalued at the moment. Reached nearly 2000s back in 11, and then that was coming from a bullish run from 08. So can you see it took years, good 3 years, for it to reach the peak from the oil crisis when everyone started switching all their money to gold because gold is a store of value. So then here we can see that it's broken out. This was the range that it was in for most of the time. Yeah, this is just the range that it was in most of the time. So then, like, how will people see this right now? Because obviously there's also this to consider. Yeah. So as people are looking at this and thinking, okay, then is this now a good time to sell or buy gold, or should I buy it up to this part here? Because this can literally be like there. So then people, what they're thinking is, okay, then gold has rallied, so now it's going to bounce back at least back to the point at 1400, at around that level, back to that point at 1400 around it. But then obviously we've got everything else factoring in, such as the interest rates, Trump and China, because China buys the most gold in the world, right? So they're the heaviest buyers of gold. Maybe this is why gold is rocketing. You see how everything can connect together. China is the highest gold because this is very simple. China buys the most gold in the world, right? Now they're going through a crisis because Trump is actually standing up to them, so they're kind of shocked. Then how the hell can the US president come up to us like this? So what they're doing now is they're going plan B, buy more gold. The more gold you own, the more you can manipulate the price of it, which you can turn into your favor. So this is what China is doing right now. And it's not just China doing it; it's Chinese allies as well. They're also doing the same thing because allies have to protect each other. So, from a standpoint, from an investor, right now, what I would think will happen is it's the exact same thing that will happen with the S&P as well. What we're gonna see is we're gonna see this gold price going back down here. This gold price will go to this area first. Then we're gonna see a rally. Okay, that's what I think. That's the most likely thing that I think will happen, and then the rally will most likely go to around these areas here. See, so yeah. So then this is what I see from gold here. Okay, is those kind of moves. So now let's say what would a normal retail trader see? Okay, like let's draw this first one here, and let's draw that on there as well. Okay, then this is what a normal retail trader sees. So then obviously like they can see this trend line going up, broke out, bounce back off this one, broke out that one. So then obviously what they're gonna see is they're gonna see this. Yeah, that's what they're gonna see. But that's gonna be a fake out because obviously there's not enough orders in the market. They need to drive the price a bit lower so that they can entice everyone past this point here to prove that the price is going to carry on going down. And then even though if it ends up in this section right here, what this might happen. Goodness. Okay then. All right then. So even though if the price does come down, this might happen to the price. This, bam, bam. You see, that would just entice more people. So then you're going to see sellers here. You know, sellers like they'll just be coming in. That's if it goes down straight away because that's a scenario that I'm seeing. You know, because then once it's broken out, there's a lot of buyers here right now. You know, people obviously they follow the same rules over and over again, knowing that they're gonna get fucked somehow. Excuse my French, but knowing that they're gonna get messed up somehow. So obviously, there's a lot of people who are in the buy zone here. You know, obviously, like nothing goes ever that. So then, yeah, as you can see there, so that's like a confluence here. So then, as it breaks down, people are gonna think, oh, okay, it's gone back down here, so it's gonna go at least slightly to around that place there. Alright? Because bear in mind, while this is happening, alright, this market will be rising. Right? This market will be rising. And then every time that, because this is how people think, when the US market rises, get into the US market. When it's dropping, get into gold and protect your money. But obviously, this market is not real, it's fake, completely fake. So the powers that be control it, but they have to use some truth in it to try and see. So then obviously, as the US market is going up, gold will stagnate, flatten, or maybe just turn bearish, just a small bearish, like not dovish and not, like not diving off a cliff. I don't see that coming. But then you understand what I'm trying to say here. Alright. So what I think with gold is people will think this will happen. Okay. It might carry on, it might just bounce back and then carry on going up there. Because like gold is definitely a long term, if you're trading short term swing trades a couple of days a week, yeah, you can short this. But if you're looking at it as an investor, then yeah, you better buy this stuff because it's a precious metal. It's very precious. Precious. An old Lord of the Rings joke right there. But yeah, this is what I see happening with gold. So currently, this is what people think might happen with gold. Okay, or it might just go back into a range, right? Because it was in a range for a long time. Okay, So then, but what I see with gold is basically playing around with people, going back up, down, and then going back up again. But this will be a buy zone, you know. Yeah, that's my buy zone right there. My heavy buy zone, and obviously push it north, and it's gone. So that is the gold on the charts so far. So let's just see what the news is saying with the gold. Alright, because obviously they're giving us like intraday prices and trades. Is like gold price could jump to 1600 on military intervention in Hong Kong. So I haven't forgot to mention about the Hong Kong stuff. And I'm just saying this now. So then, that is what it actually is going on right here. So that's how you connect the news. Sorry, I just got a text on my phone there. I got a bit distracted, so apologies for that. But yeah, this is what I see on the news, and then just because I see that, I just don't believe it. I just use my own intuition as well. With what's going on in Hong Kong, they're trying to make this into like people in Hong Kong are trying to let the world see what's going on there. And then China's got a huge influence on Hong Kong. Obviously, it's like a city state or something like that. So then, obviously, the world is looking at China, and prices might jump because China owns the most gold. If there's war coming, obviously prices will go up. You see what I'm saying? So those are one of the factors as well that might come into effect. Let's just see what this guy's
of markets today.
Oh, you're absolutely right about that, Romaine. We do have a risk asset rally on our hands. If we take a look at the influence on the futures market, we're going to see that it's all about the weak dollar. That, of course, and the Fed surprising dovishness, or at least the way the markets are taking it right now. Take a look at the S&P 500 E-minis, up 0.6% off the highs, but nonetheless up for a fourth day in a row. Crude oil up 5.4%, surging. Another risk asset, less liquid. This tells you investors are really leaning toward risk. The best day of the year. And gold futures up 3.3%, the best day since June 26th of 2016, or 24th of 2016, I should say, when we had that big Brexit sell-off. Investors seeking a haven then. Right now, they are seeking potentially a hedge against inflation if the Dove or the Fed does go even more dovish than expected. Now, all of this, of course, you can see weighing on that dollar, and we are potentially seeing an interesting shift for this chart. Now, right now, support is holding. We do have some surprising strength. It's a 2-year chart of the dollar index. We see an uptrend, the dollar index holding that 200-day moving average over the last year. This range of volatility right now testing down onto that 200-day moving average, breaking out of a range. It's holding on, but it does appear to be on the cusp of a breakdown. If it does break down, you could see it go anywhere to 94, 92, maybe even 90. That would potentially drive gold and the other commodities and risk assets higher. To talk more about this, I'd like to bring in John Roque of Wolfe Research. So great to have you here,
Thanks,
John.
Abigail.
And what do you think of that dollar chart? Do you think that the dollar can hold in, or do you think we're going to see a breakdown?
We think the dollar is going to weaken. So
Okay.
we monitor about 30 currency pairs, and 26 of 30 are weakening. So the dollar is weakening sort of across the board. So we're just going to break.
So one great way to play that, of course, would be gold futures. And you have a
No
chart,
doubt.
and I just want to give you a little bit of applause here because you sent this chart to me yesterday before that breakout.
Did you hear that? Saying that the dollar is going to weaken. Down. Let's see the dates right. Oh no, it didn't break down. It actually went up. Don't follow what these people say to you, because these people, it's like it's like clown world. Like they'll say one thing and then another thing happens. Dollar's gonna break down. Dollar didn't break. Dollar's actually getting strength. Let's see currency. Let's just see back onto the video here.
Okay. Really drive gold and the other commodities and risk assets higher. And then now let's take another look at a.
So obviously this guy's saying that the dollar, is gonna break down, blah, but there was clues here already that showing that this dollar is not gonna break down, because you see the support here. This is where they caught everyone out. This is where they caught everyone out here, because everyone thought, okay, this is broken down, I'm gonna sell, and then this is what they probably thought was coming, but then it just breaks up instead, because this is in line with the trend here. Okay, Let me go on weekly. You see that? Like obviously it's not touching, but it's very, very, very close, and it's in line with the trend. And then look at this as well. Look at that, huh? You see, like when you look at the bigger picture, you can see what's actually going on here. That is what the bigger picture is. So then let's take a look at this bit now. Look at that. What do you see? Huh? That is what you see. You know, because here, what's going to happen now is that's going to go probably break down back to this bit here, and then people are going to assume that dollar, the dollar's collapsing. Oh my God, Trump's going to lose the election, and then boom, that's what's going to happen. Okay, that is what's going to happen, and it's likely to go back to these levels here. Very likely to go back to these levels. Very, very likely. So then let's take a look back at gold and think, okay then, so if the dollar is the world reserve currency, why would gold and dollar go up at the same time? Like people ask me this all the time, you know? They ask me this all the time. I'm thinking like, yeah, just because like they're correlated doesn't mean they're gonna move together. Because gold is going up, so is the US dollar. You know? Because gold is a store of value. That's what people always forget. Store of value. Alright? It's not something you can make money off, like quick money from. Unless it just goes up because there's economic downturn or like war or something like that. But it's not like you're investing in a stock. Gold is just a store of value. Gold is literal, like it's actual money. You know, it's actual money that can store your value, can buy whatever. A piece like bread, yeah, how much it costs in gold is the same as it did 2,000 years ago. No inflation. Apart from like, let's say 0.1% or something like that because they've dug up more gold. That's it. That's how it actually works. That is how gold works. So then just because you see like the US dollar rising doesn't mean that gold's gonna go down or flatten. Alright? There's different factors which play into this. Like here I just typed in gold and then I typed in the most. What's going on here now? Precious gold slips as equities gain. This is all like intraday. This is not investing. Okay. So the reason why they put this kind of news out saying gold is slipping, these are for the short term people, right? But then it makes it look like it's long term for investors. So then any average person will see, it's weakening, so I'm not going to buy now. And then they'll miss a rally, you know? And this is the weakening that they're talking about. This, right there. Let me go on there, actually. That's it. That's the weakening that they're talking about. But look at this rally. Huh? Can you see what I'm saying now, people? So, this is what I think will happen with gold. Okay, let me just recap for a minute. Based off the charts, solely based off the charts, and based off what's going on in Hong Kong, based off what's going on with China and the US and the trade war. You know, based on what's going on with Brexit as well. You know, because these European banks, you know, with the gold and all that. Because once the UK leaves, I'm telling you, Germany's going. Because Merkel's getting out. Not her, but she's going to be out of her post. People don't like her no more in Germany. Italy's going. Okay. Ireland looks to be going as well, but they're playing a long game. They're trying to see what other countries are doing first. They don't want to put their like both feet into the water, don't they? So they're just putting like a little pinky toe in there. So, in terms of gold is literally heavily undervalued because it's always being manipulated. Because it doesn't make sense for the currency to inflate that much, but then gold is staying in those levels. It's artificially manipulated because the big guys own the most of this, so then they can keep the prices in check. So gold should be around 5,000, 5,000, 6,000, 4,000 at the minimum right now. But it's heavily undervalued. So then you could see a rise in gold like you did in Bitcoin. Even though Bitcoin is a bunch of fake stuff, and then that Bitcoin is just there to transfer wealth, and to gain wealth in a short space amount of time. When you get in, get out, that's it. Bitcoin is not a solid store of wealth like something like gold, because it's literally all on a computer. So what happens when someone turns off the computer? You don't know who actually controls it. They tell you, oh no, it's not centralized, blah, blah. Listen, yeah, these people have got so much technology. They're like literally 1,000 years ahead of us. All right, these guys had iPhones back in the 60s, like the government and that. So don't just trust anything that they say. Take it with a pinch of salt, and then do your own research. So this is how I think gold might happen. Okay, gold might go down to the 1383 level and then bounce back up. Okay, possibly going to 1800, 1900. Right, or it might go into this very good buy zone right here. This is a very, very good buy zone, because in this buy zone right here, there'll be more sellers coming to the market. Okay, so like the sellers coming to the market here, people will be selling because it's gone back into the range, thinking that this is a false breakout. So it's gone back into the range, thinking that it's going to go back bullish, which it's not, by the way. This is a double fake out. This is a false breakout, false break in. It's going to move out. So it's a double false move here. Double speak, some communist stuff. So like, this trend line is very significant. Don't get about it, because you can see how price is coming, rejecting it. So this is what's likely going to happen. Because here, what you might see here is also is a bit of movement. So let's say price might come down that, and then something like that, and literally something like this. Like, we're going to reference this video back as the days go on. Price might do that, and then eventually it might shoot up. That's what might happen. It's just too intense. And you can see how there's a step. People will start drawing trend lines. Think, oh, look at that. Yeah, it's going down. So I'm going to be selling up this trend line. They saw the third one. Boom, it's gone. So that will be. This is my analysis of gold going forward so far. If you guys want any more analysis, I know I've only got probably like 1 or 2 views at the moment. But yeah, if you guys want anything more, just let me know in the comment section down, and then I'll analyze it. But I'll go along recap with the news and everything like that. And I hope you guys have a good day. Don't do anything I wouldn't do. Always look at your risk. Your risk is number 1. Okay? Look after your ass, your backside, so that you can sit comfortably on it, counting your money, counting the days of freedom that you have. Because that's what we all do it for, is to buy freedom, people. That's it. Thank you very much. Have a good day.
The revolution will be live.